good afternoon, everybody. Welcome to TraderMerlin Show for your Friday edition. Trading week wrap-up. It's whiskey. Someone was asking me, why am I drinking whiskey? I thought you said tequila was your drink. Tequila is like for long drinking. For a sipping something, I'll have a nice glass of whiskey. So cheers, everybody. This is Woodford Reserve. Had to polish off one of the bottles to make space on my shelf or something else. So cheers, everyone. Happy Friday. Interesting day out there today. Nice little about face from our markets. But just continuing on that selling pressure, which I wasn't quite sure. I like Liz's comment here about possibly some good news coming out of the weekend. The way we turned around after a nice big slide, it just kind of felt like it was setting up for that. So I ended up closing out my Amazon position. So you guys know I bought directional puts, which I don't normally do directional, but I closed those out today. That was a pretty nice trade for just a few days, but I'll share that one with you here in just a second. So there's my graphic for today. And why? Well, if you look at the weekly candles of the S&P 500, everything still looks good, right? It's still on a fantastic uptrend. This is the weekly time frame. But Bob Dunn, rest in peace, wherever you're at right now, Bob, would be looking at this going, this weekly close, this is your short. You guys should be short right now. Well, I would argue that we're still in that overall uptrend, but definitely an opportunity today, or at least this week, from short opportunities as it started breaking down below lows. Man, I can't even talk today. It's been a really long day. I had more vet visits with my pup. What is noteworthy is that candle in the S&P. Look at that. That is what some people would call a dragonfly doji. Almost a dragonfly doji. So the dragonfly doji would be where it opens and closes at the dead high, has a long bottoming tail, and it's after a pretty sharp sell-off. And I would agree that from the peak we had here on Thursday of last week to the bottom that we achieved today, that's a 4.29% slide. I would put that as pretty significant slide, especially for something in a big uptrend. So again, going back to my very simple rules on how to trade this, you'd be looking for along above that 6,772 mark on the S&P futures. So looking pretty decent actually from a buy opportunity. I know a lot of people were freaking out and kind of had this real negative, gloomy approach to the markets today and this week just because of the Michael Burry stuff. We talked about that with Larry. And I still do believe we're going to see more downside movement in the AI sector, but it looks poised for over the weekend. Like I agree with Liz. I think there might be some good news coming out, certainly. What do we say? Dems offered to fund the government for an extension of the healthcare premiums and let the voters decide next November. It's just so annoying. So annoying. Well, maybe it'll happen, right? And that will probably be a positive jolt for the markets going forward. Now, Les says, is it a modified hammer? Yeah. So a hammer is where you have more of a real body, right? For those who don't know what a real body, that's the distance between where it opened and closed. So, for example, yesterday, you see Thursday had a very large real body in red, right? That was where it opened at the top of the red candle, closed at the bottom. Day before that on Wednesday, we had a smaller real body. Today, extremely small and right near the top, which is why I classify this almost as a dragonfly doji. But it's really a hammer, right? A hammer is going to have a real body that's in the upper third of its range, which we definitely have today. But usually it's a little bit bigger of a real body. So today, not that large of a real body. But anyway, a great opportunity. Unfortunately, it's Friday, which means you got to wait a couple days till the markets reopen and we get action. If this was like on a Monday, Tuesday, or Wednesday, oh man, I'd be up before the market open, ready for this bad boy to rip to the upside here and show us some new highs. So we'll have to wait and see what the news is over the weekend. But S&P looked great on that daily candle. And if you look at NASDAQ, this is more of a hammer formation. Same picture, but we have a larger real body on that one. My future ex-wife, the real body. All right, candle swinger. That's just journalists trying to explain the move. Well, I don't know if it would say it's just journalists. I mean, there's quite often the belief with candlesticks and with charting is that everything that is known or knowable is reflected in a stock's price. And just imagine that you are an elected official and you're behind those closed doors bickering back and forth, because that's what you do, and you realize that your party, whether it's Democrats or Republicans, are going to cave in on something, and most likely that deal is going to go through over the weekend. Safe to assume we're going to have a pretty significant bounce on Monday when everything's back up, just the kind of a relief rally. Well, it wouldn't surprise me that if I was one of those elected officials behind those closed doors, making those votes and knowing that my party is going to help put this thing to resolution, I'm going to get on the phone and be like, yeah, this is Senator Rothfeld. Yeah, I'd like to talk to my broker. Yes, I need you to buy long S&P. Actually, you know what? Don't just buy long S&P. Load me up on the futures and buy a little bit out of the money calls. Yeah, the lower premium. Yeah, you can go out Actually, no, do it for next Friday. Yeah, we'll have a big pop next week. And I'm going to load the boat with leverage instruments. I'm going to buy the market, and I think that stuff's going to leak out. And ultimately, you see these markets turn around. Either way, you had a clear about face for today's equity markets. Now, the one thing that doesn't stand out is the volume, right? Volume is not climactic. Volume is not off the charts. I'd love to see a huge spike of volume on today, but definitely higher than normal. So that's a positive piece. Now, that was your S&P and your NASDAQ. Look at the Russell here, which didn't have the same picture. It's actually better, right? Notice the way that the Russell candle formed. That's a hammer, but it's also a more bullish hammer. It closed almost right at the dead high, bigger real body to it, increasing volume. So all three of these indexes look poised for rallies next week. Now, if we add the Dow Jones Industrial Average, all right, still similar picture to what we saw with the Russell. So, of course, broad market rally intact. Now, that wasn't all that was moving. There certainly was a lot more than that. No worries, Liz. No worries. Steve says, I agree that was a very bullish candle. However, the 7 candles prior are bearish. Yeah, of course. That's what makes it more important, right? When you look at something like, let's go back to that NASDAQ, not all of them were bearish. I mean, you had some green ones in there, but really for 7-8 days, we were doing nothing but selling off. And I would have liked this better if the NASDAQ fell into an area of demand or even fell all the way down to this red line I have on your screen or green line I have on your screen at 24,422. I'd love it if it came down and touched that, right? That would just add more validity and support to the trade that I was thinking of making, or at least the setup. S&P, it also did not come down in any real substantial area of demand. Of course, if you follow Trading Academy, you could break this into different time frames and look back out here and see, where it might have come into. Actually, really didn't hit anything. There was nothing substantial, even on the hourly, that would have drawn my attention into this bad boy for the S&P as a bounce point today. Steve says, 25,800. I'll be adding a few puts as protection. Well, 25,800? Yeah. Well, we could be there very, very soon. I mean, that's just coming right back up to this kind of break point where we broke down from earlier this week. Right on Tuesday, we broke down below 25,723. And now you have the possibility for a rally. Now, I got to be careful here, Steve, because remember, what's the overall trend, right? The trend is your friend till the bend at the end. And even though I'm bearish, I feel like there's just so much optimism, so much AI pump. I feel like we're headed for a nice correction here. Give me a good 10% drawdown would be great. We still are an uptrend. Even though we look bearish this week, still is an uptrend. This could easily rip and make an all-time high, right? So just be on your toes there, and don't get so hung up on that short position, because if it rips above these highs, you could see it really start to move, even though it seems inconceivable. But if we do get a government shutdown resolution, and who knows, maybe some deals with China, you could see just a monster strip. So you got to be careful. Always be careful. Jay says, bears start looking for shorts on a retrace, and then government opens and traps the shorts, new all-time highs. Exactly, Chase. That's kind of what I was alluding to. So you got to be careful. I'll show you here in a second. I'm not going into the weekend with any positions on. Typically, I love holding positions and carrying things over the weekend, going swing trades the last couple days, a couple weeks. I got none of that. And sorry, my sinuses are driving me nuts here today. Here is some trades that I made. So these are all closed out. I've got nothing in my account right now. I had that Fiserv, which I sold the $62 strikes. That one worked out great. Those expired worthless today. I paid brought in $1.25 on those. The one that I paid for, I bought long on those Amazon puts. I sold the 250 puts, and I paid I bought the 250 puts. I paid $355. I closed those out this morning at $9.95. Feeling pretty good about that one. I mean, that was literally a trade that I started this week. If we go back to that Amazon chart, I mean, you look at. It's one of the reasons I just love options. And normally I don't go for those super high rates of return like that. But my whole trade was made on Monday when I saw the shooting star. Remember, I was like, it's a shooting star. Normally I want to wait for confirmation, but I bought some before, and I was going to buy some the next day, but it never triggered my second entry. So I was just stuck with the one position. Not stuck, but I was in the one position. But for a window of time of just a few days, and I got out when it was down here somewhere around the 240 mark, so not out at the 244. You're looking at a slide in that of 5.21% for Amazon, but at the end of the day, that was almost a 200% gain for the same window of time, 6 days. So Amazon falls 5.2%, but the option shot up in value to the tune of almost 200%. That's a pretty great rate of return. Now, unfortunately, I didn't load the boat, right? I don't like to take those kinds of chances, but Usually I'm more of a selling options, collecting premium. This is one where I saw the shooting star, and that's one of my favorite patterns, just like we saw with the S&P today. It took a good amount of my willpower not to buy calls. I was just about to buy some calls directionally on the S&P and the NASDAQ today, going over maybe a couple of weeks just to see if we got a pop on Monday, but I don't know. I'm just feeling a little bit cautious right now, so I decided not to do that. Anyway, those two positions are out. That was the Amazon, which I showed you there, and also FI, which had a nice day today up 3.36%, closing at 63.70. Actually, at one point today, it would have been in the money, and I would have been put those shares, but even if I got put at 62, I'd be okay with that. Not too bad. Yeah, the call play came in around 11:30, right? And you can see when we break this up into a smaller time frame how it started to rip. Let's bring up that S&P, show you on a 5-minute time frame here. It's just a real clear about face, and this goes back to where do you set those rules, right? What are your triggers for that? At this point right here, for my people that can see the charts, you look at 9 a.m. Pacific. Well, that was not the point to buy. We were still drifting lower, right? I would say at the latest, your entry time should have been right around 10:15 Pacific time, as it started to show that it's making a higher low and broke through a high. So that was the first real indication there, and what a great little rally that was up. Unfortunately, I've been in meetings, and I had to take my dog to the vet again. Yeah. Big guy says, I'll probably regret that next week, but nice profit for yours. Yeah, you don't regret it, Big Eb. You made some money on it. Could you have made more? Possibly. But who knows, right? What happens if on Monday morning bad news comes out about the market and all of a sudden it just tanks? You'd be like, oh, glad I did it on Friday. So don't second guess yourself. You did the right thing. Just the same thing as me closing out my long puts on Amazon. Could it continue down? I mean, I think you'd all look at this chart of Amazon. Let's go back to AMZN. And the fact that it broke down and looked like it was starting to fill that gap. It started going into the gap. I was really debating just letting it fall, but I don't know. I didn't want to go into the weekend with it. But, could this close? Could this go all the way down here and close that gap around 226? Sure, it could. But having that quick of a rate of return, I'm a big believer in not looking a gift horse in the mouth, so I was more than happy to take that profit off the table. Call it a weekend. Go buy myself a nice cocktail and a nice dinner this weekend and be it what it may. Price action is going to explode on the open Monday. We'll see. We don't know now. I mean, I think so. I think at this point, I do think you're going to see a much better Monday. But as we all know, the only thing that's certain is uncertainty in the financial markets. All right. Let me run through a couple of different questions that came through here. Good question from Andy. Andy, I hope that you're watching. He says, if I want to protect my 401k account, what would be the approach? Well, it really depends on what is offered to you in your 401k. And I guess you have to ask yourself the question of where do you think we are? Do you want to protect it from an AI market bubble bursting? Do you just think the market's going to sell off? Do you have just a lot of profit? What is it that you want to protect? So if it's simply to protect your position, I guess you got to look at where we are from a market cycle perspective. So here is a sector rotation model. Now, this is the historical stuff that's taught in textbooks and collegiate classes on which market segments lead at which points in time. So if you believe that we are right here, the orange being the stock market and the blue being the economy, right? Stock market typically leads the economy. It's anticipating where the economy is going, which is why it's unfortunate we're not getting all the data we should be from our government right now, but that's another story. If you believe that we're here at the peak and maybe even to that rollover point, then you're looking at consumer staples, healthcare, and utilities, right? Those are the three that would really start to benefit as this thing starts to roll over. So in the document that you sent me, these are all the different funds that Fidelity has for you in your 401k. And I've highlighted the ones that you need to just omit right away. Like, don't even pay attention to it. And that is, where is my, there we go. These are all the ones in red I've highlighted. Those are all stocks, right? So if you believe that the equity markets are going to crash, then none of these are going to be appropriate for you. You don't want to be putting yourself in any of the broad market stock funds. You look down here at the bottom, and you have industrials, materials, real estate, and then this Calmos market. This is a weird one. This feels like it's a hedge fund. I went and looked it up. It looks kind of like a hedge fund. They're going long, short, all kinds of weird things. I personally would shy away from stuff like that. And then you have utilities down here at the bottom. So in my opinion, if you felt that these markets were going to roll over, I think the safest thing to do is go to cash. Just go to cash. Go into a position of I'm staying neutral. Now, I don't see anything here that's there, but they usually have a money market fund that you can go into, and it'll pay you like, 1 or 2%, a small amount. But if we go to the sector rotation model and look at that again, I'm sure why it was taking so long. Utilities would be one that would capitalize if we started to roll over and started to fall from a market perspective. Now, that's assuming that the market does follow this historical crescendo of events, right? This sequence of events of, okay, it moves from energy to consumer staples to healthcare to utilities, financials, real estate, and then the whole process starts all over with technology. I'll be honest, I personally think that this model is broken, right? I think that this model is broken where it doesn't necessarily follow this. Toby says, get USDT, get 4%. Sure. What about moving that 401k into bonds? And that is certainly an option, Numa, but I noticed in the list that he gave me here, there are no bond funds. I would say you're probably okay putting your money into a bond fund. If, again, you have to have real strong conviction that the equity markets are done for a while. Not that they're going to collapse, but they're either going to go sideways to down. And at this point, I don't know if I can make that statement. I don't have confirmation from the equity markets that we are done. We're still in an uptrend. And I'll take some of these lines off the screen just to make it easy for everybody. I believe that 6,540 line on S&P futures is the line. Well, let's go to the SPX, which is a better representation because that's the actual market. And I'm going to move this line down to there. So right around 1550, right? If we broke down below 1550, then I'd have much stronger feeling that, yes, we are in fact making new lows. That trend is, at least at that angle, the trend is broken. So therefore, I would say move into bonds or move into cash. Now, Steven says, so 401ks only allow you to move money once a quarter, so you have to be careful not to overdo it. That's not entirely true. Different 401ks give you varying degrees of executions. Now, some have a once a quarter. Others are much more frequent, but there typically is a limit on how many transactions you can make. One thing that most people don't know is you can go to your HR department, and if your company's big enough, you can ask them about self-directed 401ks. Now, what has to happen is you will fill out a document that basically says, I am willing to accept this risk. I assume all the risk of this because now you're no longer stuck with these funds. You're pretty much open to the whole world that we look at here every single day. So you could get the Dow, the S&P, the NASDAQ, ETFs. You could buy IBID. You could play with all the different markets that are available through your brokerage firm if it's self-directed, okay? So that is certainly going to be something that I would look into if you want to be much more active. If not, to answer your question succinctly, how do I protect this position? How do I protect my portfolio? I would say go to cash. The worst thing that happens when you go to cash is the market continues to rally and you just miss the boat. Look, the market's been rallying since 2009. You've been on this boat for a long time. If you went into utilities, now you're locking in your opinion that, okay, we're rolling over, and I do believe that we're going to see a prolonged market sell-off here. And if that is the case, then utilities might be the way to go. It also may just be a short little pullback into an area of demand, and the market continues to rally. At this point, I'd put more money on a pullback into demand. Market keeps rallying just because that's what the market has done. Even though I think the crash is coming, I'll have a better belief of that once we get to 65.53 or break below 65.50, right? So I'm hoping that helped you out there, Andy. Hope that helped a little bit. Are we in a corrective phase of the uptrend? Yes. You could look at this last move that started here on October 10th, and you could call that an impulse and a corrective phase. Now, normally, the impulse is stronger move to the upside, and then the corrective phase is slower. It actually has a faster corrective phase here, and it's been the last couple of corrective phases have been rather aggressive. But we're still seeing move up, slow move down, move up, slow move down, move up, slow move down. It's still following an impulse and corrective phase here. I'm sure I have somebody that's an Elliott wave technician who's going to challenge me on that one, but that's okay. At this point, you still got to stay long the market. You still got to stay long. until we start making new lows. When that happens, that's when we're out. And you know, you hear me say this all the time, and we used it on with yesterday with Larry, and I really like this part. You know, if you look back here and you go to, you know, those market crashes we talk about from the 2000s, right? I mean, this is just a great example. You know, here's your S&P. If you looked at this chart here of the S&P, this is from 1993 to 1999, and you looked at this, you know, in 1992, the S&P was under 400. And by the time you get to 1999, which is 6 years later, it's at 1,200. You know, there's gonna be a lot of people that go, "Oh, you gotta sell, man. This is such it's huge profit." Well, it just kept on going. Now, there were a couple points which would have juked me out, right? And that would have been number one, here in 1998, when we started to make a pivot and made a new low, that would have got me out, and I would have jumped out of that position. Same thing here. As we started to break down in October of 1999, we made new lows. That would have stopped me out. However, it also would have stopped me out here in October of 2000 because we started making new lows, and that would have saved my ass because the market fell 57%. So you can't time and win all of them, but for me, and I think this has been pretty evident through my talk track for the years I've been with you guys, is it's about having rules in place, and those rules are designed to protect you. They don't always optimize your rate of return. They're not always going to get you at the dead high or the dead low, but they'll at least prevent you from holding on. Because if you have that attitude of, I think Oliver is going to say something, but if I was in this attitude right here saying, well, market's going to crash, and Oliver's perennial bull, he thinks it's never going to crash, well, at what point do you get out? And you just see this market fall, and oh, it's going to come back, I'll buy more. And pretty soon, depending on how big your account is, you could get margined out, and your account's blown, right? So, and the same thing happened here in 2007, right? We were on this monstrous bull market rally. It just kept on going and going, but we never made really new swing lows except for this period back here in 2004. Once it started to, here, all right? This is literally when I was on TV, January 2008. That was when I made my call and got kicked off of TV for it. Well, I followed my rules, and that was a phenomenal years trading because it was just stay to the short side until we make a new high. And we didn't make a new high until 2009. It was great. What was the daily ATR in 1983? Oh, man. Small. Very, 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 very tiny. 93 or 83? In 93. Let me see. I had ATR on here. Should have been on there. Let's go average true range. It's so funny. The average true range back then was probably what it is on a day here. The ATR for the S&P back in 1993 was roughly, call it $9. $9. Isn't that ridiculous? That's just insane, especially when you look at what it's at today, right? I'm scrolling forward here, sorry. Our ATR today, 142 points. Actually, 166 for ATR. Wow. Wild. All right, so Andy, I hope that helped you out there. Again, I think that if you're nervous and you just want to preserve your capital, go to cash or bonds. All right, just go into a bond fund if your 401k has it. If not, talk to your HR department and see if they're self-directed. Just if you do self-directed, for all of you, please be careful. What you don't want to do is get all excited and be like, oh, well, I'm in my self-directed 401k. I'm going to buy a whole bunch of iBid. I'm going to buy some MicroStrategy. Don't do that. Do not do that. You got to be protective in that. What other questions I have here? There was another one that came through, which I thought was good. Where is it? Some of you probably have, I would say, more positive feedback on this topic than I do. I'm not a fan. And Mark asks, what are your thoughts on prop trading? I understand most of them have strict rules, but it also gives me an opportunity to trade with a larger account. Any firms you would suggest that are trustworthy? No. Nope. Not any. Not for me. Not for me. I don't buy it. I've heard so many just bad scams on prop firms. And so one thing that they do is they charge you for an exam. And you have to take this test. It's a trading test, and it costs you a couple grand to do it. And if you don't pass, they don't care because they keep the money. And then you want to take it again, you got to pay again and pay again. I knew a guy who took it 5 times, and he still's not in. I'm like, well, what are you doing? You're just throwing money away. He's like, well, I want to get a prop firm. I want to have borrowed money. I'm not a fan of that. You have very specific rules. It's nice to trade with someone else's money, but the reality is trade with your own money. And Mark, maybe you don't have a lot to trade with right now. But it's not about making money early on, right? It's more about understanding how you trade. You're not going to trade the same as me. You're not going to trade the same as Big Eb or Oliver or Steve. You're going to trade differently than other people, and you're going to trade like yourself. So it's about self-discovery and figuring out what works for you. When you're trading with borrowed money and you still can't prove to yourself that you're successful, your odds of success diminish significantly. Because in the beginning, you're most likely to lose money, regardless of what your strategy is. Just because you don't have any rules in place. You don't have discipline. You don't have execution skills, right? You're still panicking and fear and greed and all that garbage. So if you're using borrowed money, what makes you think you're going to make money faster? You'd be losing money anyway. You're just going to lose it faster. And remember, when you borrow money, you're responsible for the money that you lost that you borrow. So for me, I'm not a fan of prop firms. I'd rather start with a small account, work my way up till I got comfortable. And if I got comfortable and can prove I was making money, then maybe I would borrow some from family and friends, or maybe go to a prop firm if I really want to go that route. But they take a percentage of what you earn, very strict rules. They're very quick to kick you out if you don't follow those rules, which I respect that. If you're trading someone's money, you should follow those rules. Yeah, as Larry says, plus you pay a prop firm a percentage and a rather large monthly fee. It sounds great. They're not for me. I know a couple people that do it, and they like it, but if I can trade successfully, I want to keep 100% of my money and compound it. Just keep growing it and growing it and growing it. As Big Ed says, much different emotions trading someone else's money. Absolutely. Absolutely. Yeah. It's a whole different psychology, especially when you're trading large enough and you realize that if you mess up on this, you could lose all your money because you're using so much leverage. Yeah. So no, Mark, unfortunately, I don't have any. I saw somebody mention here, Take Profit Trader is good, but I don't have any recommendations. My kid gets 85% of the money that he makes. He just doesn't have the money himself. He's only 25. Nice. That's great. So he's using your account, Steve? He's trading your money? That's cool. That's a great bonding experience for you and your son. Or your daughter, I don't know. Oh, you said he's only. So, yeah, great experience. Tell you what, man, 25, I think when I got started was right around 26. At least when I took the day trading classes, and I wish I did it earlier. I had a student in my Trading Academy class several years ago. He was 12 years old. A 12-year-old kid. Oh, he's using a prop firm? Wow. Okay. My Funded Future is a good prop firm from Eric. I can't make any testament to that, so if anybody's recommending in the chat, you got to take it with a grain of salt, do your research, do your due diligence, and check them out. Make sure that they are, in fact, reputable. You can check all the user boards and see, but never been something I was interested in. I've seen people lose a lot of money on them and just pay a lot more money than they should for education. Larry says $30,000 is plenty for a margin account as long as you are flat at the end of each day, mark to market. Agreed. Totally agree. Okay, let me real quickly look and see what you have cooking for next week. I'm going to wrap things up somewhat early here today. I'm just not with it myself. My sinuses are killing me. My dog is sick. Oh, yeah, it just keeps on going. The big thing for next week, as we all know, is going to be this whole government shutdown thing. I have a gut feeling you're going to see it resolved this week. And I think that will be a good thing because next week we got some pretty big information near the tail end. You have on Thursday, your consumer price index numbers come out, which is really important. And on Friday, you got PPI numbers. This, again, is going to give us a sense for inflation, right? And really making sure that it's not out of whack. We just don't have the numbers. These have been delayed, right? So here's your month-over-month change. We had that wild swing. This August number, well, that was the August reading. We still don't have our October reading, right? It's not out yet. We're waiting for that. It's just been delayed. So I'm nervous about when the government opens up because we're going to get this flood of data. As you guys might recall, the first Friday of the month you typically get, which is today, you typically get your unemployment numbers, right? Your unemployment rate. We don't have that. And it's not even slated to be released today. It's this backlog of data. So that's kind of one of the reasons I decided to go flat for the weekend is if we get the government reopens and they start dropping all these economic reports, you're going to get a lot of volatility. And I have no clue which way that market's going to go when you have all these reports coming out at the same time, from unemployment to inflation to GDP. All that stuff could skew the market. So I just took the more defensive, safe approach and said, I'll just go home flat over the weekend, which is what we did. Other than that, on Monday, you have CoreWeave. So let's go to our earnings calendar here. So as we know, tech stocks rule the roost. They're the ones crushing it right now. Well, on Monday, after market close, you have CoreWeave coming out with their earnings. And if my thing updates here, one of the reasons it's running so darn slow today, I just answered your question. Oh, do you think the market makes changes when the information does? Yeah, I do. You're kind of driving blind right now, right, Oliver? You know, we can think that we know what CPI numbers are. We can think we know what the unemployment rate is. And the truth of the matter is it's not going to be so far out of line that, you know, jaws hit the floor. But it might not be what people expect. So if it's the opposite direction of what the market has been, quote unquote, pricing in, then you're going to get a reset, right? And that could happen very quickly. And it's just, like I say, it's just a risk management piece I decided to sidestep. So if you look at Monday, we'll sort this by market cap. CoreWeave is your big name. All right, CoreWeave obviously tied to NVIDIA and the whole AI space and servers and all that, and cloud. Interested to see what they are going to announce. You know, CRWV, which I'll bring up the chart here. CoreWeave had a pretty ugly week, as did most of the AI-related stocks. You know, grand scheme of things, CoreWeave does not look good. CoreWeave looks pretty bad right now because it really has not done anything since May. It's right back to the prices from May. It's not making new highs. It's not making new lows. It just feels like it's kind of flatlined. Whereas you look at something like NVIDIA, it's been trending the upside. It was, you know, traversing sideways, which is fine, but we've finally broken out of that. Now we're retesting it, and we'll see if we can bounce up here from NVIDIA's perspective. But Michael Burry, we looked at yesterday. Remember, he's got 56% of his account, or sorry, 65% of his account is in PLTR. That boy made some big money the last week. From its peak on Monday of this week to its low of this week, 18.61% slide. Man, when you have $1 billion worth of it short, I made some good money there. Some real good money short. But does it bounce? You know, if you look where it's at, there isn't any real clear demand zone, but you can kind of feel like there's a line right around here where it's holding. Right? So that would be an interesting point next week to see if Palantir does have a little bit of a bounce back up. It almost feels like, and I hate to say this, when somebody like a Michael Burry puts his neck out there and says, hey, I'm going, you know, short Palantir, there's a knee-jerk reaction and the market sells off. But then I think the institutions get a hold of it and go, oh, really? Hey, guys, let's collaborate. And all we have to do collectively, you know, let's get 8 firms together, each buy $10 million worth of Palantir, and we'll rip that thing up and we'll totally destroy his shorts. This is why I never want to be a hedge fund manager, right? Because you're disclosing information that's public and everybody can see exactly what you're doing. Yeah. Steve says a lot of people don't like Michael Burry. I get it. He's kind of Big Al says he's a thorn. I agree. He's kind of annoying. He's very arrogant, and I think that it rubs people in the industry the wrong way. Look, who's got more money, Michael Burry or Goldman Sachs? BlackRock, JP Morgan. You could easily get those traders to collude and say, okay, guys, we're going to do this. We're going to jump on Palantir, push it back up to 204, 205, and then we'll sell out. And that'll cause a short squeeze on him. This type of stuff happens all the time. That's why I would never want to run a hedge fund. Wouldn't want to disclose. Like, I like keeping my positions pro. I might disclose to you guys, but I'm not big enough for an institution to come and try to manipulate trades against me. Although it felt like MicroStrategy did go against me pretty sharply. Apple held up. One of the few, right? Today actually was down 0.48, but if you look at the last week, it's a bizarre chart. This is your daily for Apple, and it really just feels like the last 5 days for Apple have probably been one of the weirdest 5-day runs I've seen in a long time. Look at that. The candles are almost all identical, these last 5. Small real body, topping and bottoming tail, no big deal. Whereas you look at other markets like Google, more volatility to it. You look at Tesla, which is just having a breakdown today, down 3.68%. You had NVIDIA, which obviously had a monstrous slide right back down to a retest here. Microsoft was pretty much unchanged, but Microsoft, this looks like a good buy. I mean, Microsoft came right back down to that 492 mark, which is the low point going back to September 5th. And if that's the case, you want to put a line right across the top of today's activity for Microsoft, and if it breaks out above that, that's your buy point above, call it above $500. So if we get a break above 500 on Monday, you could see a nice little bounce here based off that demand zone. So there we go. Yeah, Microsoft's been really dumping, but does that mean that Microsoft's bad? That's a garbage company? I think they're a great company. Then you have Meta. Meta also had a great hammer formation. It closed the gap. It closed this gap, but I was kind of looking at Amazon do the similar thing. Meta closed that gap in a hammer formation, and You have, well, higher than normal volume. It is nothing like the earnings day spike, but still looking pretty darn good. Really, really nice moves here on some of these Magnificent Seven stocks. And of course, Amazon, I closed that one out today, so now I'm indifferent. I felt guilty shorting Amazon. I was telling you guys, I love Amazon, but man, Steve bought Meta today. All right, I think you're okay. I think Meta, it's a good play. You got a great hammer formation. Great hammer formation after a huge sell-off. I mean, from a percentage perspective, from the closing price we saw back on October 29th to where it closed today, Meta is down 17%. And earlier today, it was down over 20%. So, yeah, I think it's a decent spot for a buy point on that one. Frog, huh? JFrog? I don't know I have no clue what JFrog does. Frog was strong all day. Well, ribbit. I mean, it also had a pretty big gap up and go. 29% gain. I don't know what JFrog does, so I can't make any comment to that thing. You got some weird symbols I don't know about, my friend. EOSE. Oh, yes, energy. That one I do know. Another 19%. That was, I'm assuming, off earnings. No, earnings was 2 days ago. All stuff that I normally would not be trading, but that's okay. Frog was hopping. Okay, security software. Nice. Let me see. I think I covered all my questions. I'm just scrolling through my slides here. I think that I covered all the questions that were asked. I did. All right. So next week, I think I said Scott McCormick's going to come on the program. I need to look at my calendar. That may actually be a week out. I was trying to get Scott McCormick on the show because it's been a while since I've had him on. I know a lot of you have been asking about Scott McCormick, so I did reach out to Scott. I'm hoping to have him on the show. Let me look at my calendar here real quick. I have not updated it to the TraderMerlin website. Scott McCormick, won't be next week. He's going to be on the 19th. Scott McCormick will be on the program, December 19th. And then I'll keep you guys posted. There's going to be a bunch of weird days I'm taking off. I'm doing work for several different places. I'll be traveling as well. I will be going to Dallas, Texas. Let me get the dates here. November 21st, 22nd, and 23rd. So I'm going to probably be gone Thursday, Friday, and I should be back on Monday. McCormick is November. Yeah, McCormick's November. Coming up in 2 weeks. And I'll move that over to the TraderMerlin webpage. It should update here. I'm going to try to get a few more guests for you guys. I know you guys enjoyed the guests I've had in the last few days, so I'll try to get more of those guests for you. Any other last questions before I wrap up here, guys? My sinuses are just driving me absolutely bonkers right now, so I'm fighting back. Fighting back the sniffles over here. Anything else you want me to cover for you, Bale? I will say, I hope you all do something fun this weekend. I'm going to be hosting a little trivia tournament at a friend's house Saturday night. Going out for her birthday tonight, so it should be a good one. I hope you all have a fantastic weekend. Go do something fun. We're coming up to, I guess, Monday. Well, let's talk about it Monday, but it's the Marine Corps' birthday on Monday. All right, love that. So cheers, everybody. Hope you have a great weekend. Thank you. If you have anything that you want me to cover on Monday's show, email me, tradermerlin@gmail.com. Don't forget, you've got CoreWeave coming out with earnings aftermarket on Monday. That'll probably be one of the biggest highlights there. That said, great weekend, everybody. I'm out. Have a good one. Take care.